The S&P TSX Composite fell 242 points yesterday, with 9 of the indices' 10 main groups ending lower. Diana Avigdor from Barometer Capital, she's portfolio manager and head of trading over there, watches these markets very closely, and she joins us right now. Diana, not a positive day, obviously, yesterday. New York was a little bit more muted. What was your reaction to yesterday's sell-off?
Definitely, Francis, not a surprise. Markets have been powering higher. Commodities have been powering higher so for a very long time. And so everybody was kind of standing at the end of the cliff, looking down, making sure that they find a stone to step on should something happen. So risk off yesterday, flight to safety. What triggered it? It's been a couple of days of sloppiness in the commodity markets. Oil off a lot. Gold volatile. After Bernanke spoke last week, rallied, then sold off yesterday early in the Australia Open very violently, recovered somewhat, but definitely sloppy. So silver off 15% in a couple of days on margin increases. And some traders were citing the fact that silver was off again so much that was taking the rest of the commodity complex down, and that, of course, affects Canada strongly. In addition, Canada, its size and its commodity bias is a risk, more of a risk-off trade, and when there is a global risk, decrease in risk appetite, countries such as Canada, Australia tend to suffer a little bit more than the S&P.
Diana, are you getting a lot of questions from clients, people on the phone asking you about silver, asking you about gold? Is this a major concern even among stock investors that are, going through your shop?
You know, the thing is that there's been so many profits out there, and the silver trade has been a really crowded long. And when markets broke out, there was some anxiety 2-3 weeks ago whether the market was going to break out of a certain technical level, and it did. And so that brought on a lot of weak hands. We call them weak longs, and the markets like to shake those out. So, not a surprise and not big worry about the fact that there is some retracement in some of these commodities. It also protects conversations about inflation and the consumer getting further squeezed and things like that. So it's not all that bad.
When you were talking there about maybe some of these silver positions being in weak hands, let's talk about the activity levels here. I was just looking at a chart of volume in New York. It's been hugging kind of that billion share level at the one indicator. Toronto volume kind of sloppy, slowing down. What kind of indication does that give you? Is anybody playing here?
So I've been looking at that, and I've been thinking about potential reasoning. So volumes in the last 2-3 years have really grown. And so my thought is that in addition to the fact that, yes, there is a bit of slowdown, and portfolio managers are now letting their stock investments play out and just sitting still. But there is some normalization in the markets and in the economy relative to the last 2-3 years. And so I'm thinking that this lower type of volume is possibly here to stay. In addition, if you are looking at HFT volumes, high-frequency trading volumes, my gut tells me that we've peaked on that. And so that may be coming off a little bit. I think that that's a combination of factors. It's not that volume is down because there is no activity. In fact, I think that lately trading has been healthier than before, in that it wasn't panic up, panic down, or bid up, bid down. It was pretty orderly, and yes, at the high levels that we've been, there was a little anxiety in terms of the dealer community wanting to take any side of the position, and in Canada it's always about liquidity. But we've gone up so much that a little correction is not out of order, and we are waiting, I think, for certain important catalysts. And with RSP season behind us, with great cash flows, might I add, in many, many years, it's okay for us to stand still and see where the cards may fall.
Okay, Diana, so what about earnings in terms of a catalyst? Agrium had strong numbers this morning. Did you have a look at Loblaw and Cotton? Obviously, a lot of people are concerned about price inflation and how it's going to factor into those numbers.
Yeah.
What kind of standouts, I guess, stood out for you this morning?
Yeah, so in general, top-down earnings, let's start from the U.S. because they're a little more ahead of us on the curve. Earnings have been excellent. Surprise factors have been over 0.75%. Over 75% of the companies that reported so far have beat. This earnings season is better than quite a few recent earnings seasons. In Canada, we started to ramp up just a couple of weeks ago. Earnings have been less robust than in the U.S. Loblaw, as you see with Loblaws and Cott, there is a rotation, and this has been a theme the last week, rotation into defensives, away from the beta, which is the risk-on, energy risk-off today and yesterday type of trade. Talisman, and actually, let me just mention Suncor yesterday, for example, is a perfect example on how earnings, markets, and liquidity tie in. Suncor's earnings yesterday were very good. They had great downstream margins, as we can see when we go to the pumps. However, the stock did not react, and that is part of how Canada is positioned in the global community as a risk-on, risk-off. Yesterday, risk-off. Lots of foreign traders are telling me that there's been some foreign selling on that stock as investors seek liquidity when it exists on good news. So, it's been mixed so far. We have our financials waiting to report in the next few weeks. And RIM wasn't inspiring a couple of weeks ago. So Canada is a little mixed.
Uninspiring or not inspiring, that's an understatement, I think, Diana. Thanks very much for joining us this morning.
Thanks for having me.
Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital. She joined us from the TSX.
Now, after the break, we're going to highlight some stocks that you'll want to put on your watch list when trading begins in just about 6 minutes' time.